Good evening, back with you on the September 16th recap. What an interesting day in the markets. Some pretty amazing movers worth talking about. I'm long NWBO overnight. Just bought the market close 9136, 7,000 shares for an overnight hold. It's first green day on an OTC. These typically have legs to run on follow-up plays, and not to mention when you expand the chart on a multi, I guess let's go a 5-year chart here. I mean, this is a multi-year breakout. We haven't been in these price ranges since 2016. So looking forward to hopefully see a morning spike tomorrow that I'll sell into. The goal is to sell in the ones or just before the ones. Somewhere in the 9 to 10 cent range would be a perfect profit. And I think what's also important to talk about is what I'm risking. So to me, the stock closed here in the 92 cent range, and it had some consolidation here in the 90s, high 80s. So tomorrow morning, if it can't really hold up here and it starts tanking below this 88, 89 range, I'll be cutting my losses, because as the case is with the OTCs, you can see a similar sort of price action on SBFM, which I alerted this morning. You see beautiful percent gainer, ran up the entire day, and then at market open it tanked. And then on the flip side, you got a stock like DOCRF, where it spiked the previous day and then had a continuation play. So this is high odds. This could happen as well, but nonetheless, I'm ready for both types of plays and ready to adapt accordingly. So we'll see what happens. So let's go through the watch list that I posted this morning, September 16th at 9:16 a.m., so 14 minutes before the market opened. So I talked about DOCRF, the classic ABCD pattern, finished strong on September 15th. Looking for a break of 163 with volume on speculative $250 billion news, and it could have legs to run this morning for a morning spike. So let's take a look. So what was I looking at on SBFM? Basically, let's see here. Was I talking about the same stock? No, DOCRF. Let's go back. DOCRF, that's what it was. Yeah, so it closed in the highs here at 163, and yeah, break of 163 with meaningful volume is exactly what happened right at market open. And we would be looking for almost a 16-cent move. So we would have just that. So we would have definitely have our 10%. Bit of a slow morning spike. It took almost 2 hours for it to achieve that. But nonetheless, completely predictable OTC play. So got your A, pullback, B. You can consider the pre-market after hours sort of your C, and then the D is the continuation play in the morning. Afterwards was SBFM, that's right. So that's the one I was looking for a morning spike, but it did the exact opposite. I did say that these could tank prior to running. So it helped that it had hot sector news, but it looked like this was more interested in tanking. So no play. Okay. Had it ran past 0.38 here, then that would have been a beautiful spike, morning spike, especially on good volume. But that's okay. Sometimes these fail, and there was no trade there. HNCKF. So we had a previous runner hot on some Tesla news here, or rumors for lack of better terms. And looking for a break of 160 for the continued ABCD pattern morning spike, being mindful of the 184 resistance from September 14th. And it looks like we had a bit of a failed morning spike. We got the break of the 160s, but it turned right away. You see that right here. Instead of spiking, it opened up here in the 160s and just decided to tank. And it just kind of stayed there and didn't really rebound. And that's kind of odd, because a lot of these OTCs that tend to tank like this, they usually have a rebound. But that's the market we're in right now. So no pattern 4 to pattern 5 dip buy opportunity, just a watch, and you know, had I gotten in here, just to kind of talk about that a little bit, if I had called the bottom and bought in here, you know, there's a moment this thing would have turned and come back down, I would have cut my profits. So not really that much anyway. But this was a watch for me. There was really nothing to talk about with regards to HNCKF. Really just a failed spiker. We'll close these stocks since we talked about them. The next one was CKPT. So a bit of a choppier pattern, but the approach will be a bit stricter one because of the choppiness. It had to confirm the 432 break and the pullback to prove it can hold above 432 to see if it's you know, if it's worth running. And likely running on news of 3 investor conferences that they're presenting at this month. So let's take a look and see what happened here. So what I was looking at is right here, the 434s that topped out on September 15th, and this morning it tried touching it in midday, and then it bounced right back. And this is something to get used to with these breakouts, especially when there's no volume. When the stock tries to touch a previous resistance and doesn't have enough buying power to push it through, it typically reverses off of there. So a really healthy short, actually, when you see these indicators. But nonetheless, it came and retested it here in the evening or afternoon, for lack of better terms, and punched right through and closed. What did it close at? Yeah, it closed here in the 50s. Let's see here, 433. So it closed right at the highs. So this is definitely a watch for tomorrow morning for me, for a continuation play and a morning spike off of the 438. So it'll be a part of my watch list. So very, very nice to see on CKPT, especially in anticipation of the 3 presentations they got. GSM, lower volume play, and couldn't really find why it was running. But was setting up for a multi-month break of 60 cents and a continuation of the ABCD pattern. So let's take a look and see what happens to GSM. So really, I mean, this is nice. The only problem I have with this is even though the pattern fits the bill, the volume doesn't. And it really wasn't until the afternoon where the volume started coming in, and you see after hours it just trickled off. So this is what happens when no volume comes in. If there's any sort of selling pressure, the stock just drops. But nonetheless, nice little spike here between yesterday's close in the 57s and today's close in the 69s. You definitely had a nice 20% mover right here. So very nice for the patient style of traders. Not for me though. OAS, continuation of the ABCD pattern and the break of 65 cents. And a morning spike looks probable, and it might dip before it goes as profit takers get out of yesterday's closing price in the 50s. So let's take a look here at OAS. So as you see right here, we had the highs in the 57s on September 15th, and today was opening higher up here in the 60s. Had a beautiful dip, and I can't speak enough to this almost perfect technical analysis. Stock opened up here at what price was this? In the 61s, and it had selling pressure with high volume. And where did it bounce off of? Here at 57. And what was 57? Well, it's no coincidence. It was the September 15th highs. So beautiful little dip buy opportunity right here. Buy in the 57s and get out in the 62s. You would have had your nice 10% right here. Predictable topping action here, as that was the pre-market high. And it kind of didn't really do anything there afterwards. But, you know, there's so many ways of playing this. You can buy the morning spike. You can buy the morning dip buy. And if it doesn't reverse, then you just cut your losses quickly. But nonetheless, very nice trade here on OAS. And I think I said that, right? I said it might dip here in the morning. Yeah, it might dip before it goes as profit takers may get out from yesterday's closing price. So that was probable. It makes sense. Imagine yourself if you are in here in the stock in the 50s and the stock opens up in the 60s, you're probably going to take your profits as well, which is why there was selling pressure in the morning open. BIOC, hot sector news looks like may be able to run to break 483 if the volume can come in. Let's take a look at BIOC. So, yeah, like it looked to me like it's just consolidating today. We had a little bit of a dipping action. Again, holding off of yesterday's support here in the 440s, a little bit of support there, and then a bounce back to the 480s. Very nice. It looks like it's trying. And PEIX could be a really nice watch for September 17th if it breaks this 483, 482 price point and has convincing volume. So I'll be including this on the September 17th watch list as well, to take a look and see how it's going to behave. And I mean, the pre-market action on September 17th will really be an indicator as to whether this is worth watching or not. And sometimes these stocks, they need a few more days. They might be consolidating this entire week and maybe worth watching next week or a couple weeks from now. Nobody really knows, but nonetheless, it's a good watch. OGEN, continuation of the ABCD pattern on a break of 80 cents and a morning spike as it's holding strong in the pre-market action. So let's see what was talked about there. Right, so we had the nice, I mean, a little bit choppier, I guess, price action on September 15th. And a little bit all over the place here. So I was looking for a break here in the 80s with good volume. There was no volume coming in. And this thing just kind of trickled off. And nonetheless, a beautiful dip by opportunity here. Right? And it tried topping up here in the 80s. So it wants the 80s, obviously. But it has issues trying to push past that. And if we take a look at, you know, the multi-month chart here and see what's going on. I mean, we have a lot of these little resistance areas to punch through. So with a lack of volume compared to the previous price action, it's no surprise this is having difficulties. So more so just to watch and educate yourself on how these stocks can go, and you know, just different ways of looking at the stock market. After that was PEIX, so looking for some kind of support as profit takers likely take profits from yesterday's closing price on positive news after investor conference results. And this could have legs to run, especially for a break of 618. So let's take a look and see what happened to PEIX. So to no surprise, it dipped here right before the market opened, and a little bit of choppiness here. And after that, it kind of showed that it had the legs to run. And really what was important to me was a break of 618. It looks like we got it here, and I alerted it in the Facebook group the moment this was happening. And the important thing, again, is typically the first breakout tends to fail. Even the second breakout could fail. And it's not till it could prove that it can come down and still maintain an upwards trend where this stock is worth watching. So you better believe PEIX, having topped out here at 626, right near the highs that it got to, is primed for a run on September 17th, a continuation of a D portion of the pattern. So this is the A, the B, and now this is the C. So the D portion right here is if it can punch through 629 on a morning spike with convincing volume. Now we'll see what the pre-market action is like. If the pre-market is going to already spike the stock, then the opportunity will kind of be lost. But if it keeps consolidating in the pre-market, there definitely exists legs for this thing to move up. And taking a look at the kind of the multi-day chart right here, I guess multi-month as well, you see that we really haven't been near these price points for a really long time. We got to go back to 2017 to see the $6 price point. So really after this, the resistance, maybe some resistance here if it even matters, is in the 670s. And then it's in the 780s and 8s. So lots of room for this thing to explode tomorrow if this can actually break past 629. So this will be on the watch list as well for September 17th. KODK, previous runner, running on pre-market news. Break of 11 would be a multi-month break, and it's a bit of a higher price stock, but nonetheless, it's worth watching. Likely the profit takers will get out as it's opening significantly higher than yesterday's closing price. So I was expecting selling pressure on KODK in the morning. So let's take a look at that. And yeah, so it looks like we had the morning spike. So that's actually very promising, but it topped out here after a stock halt, which is not surprising. This thing moved to $2 per, almost $1 per share, pardon me, inside of 2 minutes. So likely a volatility halt here by the commission before they released the stock again. Bit of a gap up, but then it kind of trickled off the rest of the day. So this is a watch for tomorrow. I don't really have a strategy on how to trade this right now. Maybe a little bit of a trade-off of support here in the 8s, but it's kind of mid-range right now. So this stock has to prove itself. Which way is it going? Is it going to come back up to the 11s and punch through, or is it going to dip below the 8s here and tank? You know, there's some midday trading that you know you could look at. For example, the pre-market resistance here in the 8s was exactly where the stock bounced off of here at 11.20, so kind of a midday trade. So there does absolutely exist a couple places to trade this for a bit of a midday setup. You had a move here from the 8.14s to the 9s. And a lot of people ask, you know, how do you trade something like this? Because, you know, you had a bounce here and a bounce here as well. So how do you not get caught on the downwards price action here, which seemingly there was support here as well, like in the 870s, 860s. So what makes this not a respectable support, and what makes this respectable support? And, you know, there really isn't an answer to that. The only thing I can say is that this thing has dipped a significant amount off the 1144 price point, so a pullback was inevitable, and the recovery was also inevitable. So it just happened to be that this is the place where it rebounds. So that's why when it comes to buying the dip, typically speaking, what I like to see is that it can show recovery and take out a previous resistance, and then once it does that, you know, a little bit speculative to get in right here because this could very well reverse. But what I like to see is to see where it's going to form this new support. And once it forms new support, if it can start punching through that new support area, now we have confirmed trend reversal because we had the one spike consolidation and the second spike. So this would be a lot safer for me to enter, because worst case I enter here in the 860s and I get out in the 850s. So way less risk for me than to speculatively buy here in the 840s and maybe have to cut losses at 860. And it's quite a bit more of a loss down here. And then, you know, you get in here, you probably won't get your 15%. And in this case, you absolutely wouldn't. But there still exists about 50 cents a share right here to get in. You know, so that's like an $8,500 position becoming a $9,000 position in a matter of about 20-30 minutes. So that's still not bad. That's about $500 in 20 minutes. So just a little bit of education on how to consider doing a dip buy. And then the last one was MYO. So let's see here. What do I have to say about MYO? So massive runner yesterday on positive Medicare news. Looks like it's slowly gapping down, but if it can find meaningful support anywhere, it could be the confirmation for the next run up as the news. I must have meant as news hits more traders and investors. So yeah, so look at this. I mean, MYO, what a powerful move. Yesterday it was hanging out in the 4s, and today it was, I guess yesterday after hours went to the 7s, and today just kind of had this selling off pressure. And I guess, you know, there's something to be said about stocks that do this. This is like an elongated downwards consolidation, right? But a stock like this is almost primed for a morning spike. So maybe this is a good watch on September 17th, and if it can kind of hold this $5 range, you might have to kind of forget the past a little bit and look at these ranges. And if it can kind of spike off of the 5.10s, you could absolutely capture maybe a 30-40 cent mover here in the morning open, at the market open, pardon me. So of course the big picture is also important. So if we take a look at the Dow Jones, it looks like, yeah, just basically consolidating. It opened up here in the 281s and closed close to the 281s. So not much going on there. With the NASDAQ, looks like it kind of finished red on the day. So not the best performing market in that regards. And the S&P, same sort of thing. Kind of started up okay, but then it kind of tanked towards the close. So keeping this in mind for the overall market conditions, to alter our bias for how we expect the stocks to perform. So yeah, so we'll see how NWBO performs tomorrow morning. I'll alert it, and I'll be back with the watch list by 9:15 Eastern tomorrow morning. Have a good evening, everybody.